Hi, everybody. This is Ashley McNulty. I'm with Coldwell Banker, and this is my very first episode of Go Live, or what did I say? Ask Me Anything. Keep it clean, please, but we will answer anything. Today, I am with Alan John, and yes, he has two first names, and I'm sure he hates hearing that.
Actually, three.
Three. But he is our broker with a guaranteed rate here with Coldwell Banker, and we partner with them. And today I wanted to introduce him and talk a little bit about what 2008 is going to mean for everybody. If you're looking to buy a house, if you're looking to sell a house, what kind of interest rates are you looking at? And Alan has a couple of things that he wants to talk about as well. So that said, it doesn't look like we have anybody joining us just yet. So we're just gonna sit here and talk. Oh, there's Mary. Hi, Mary.
Hi, Mary.
That's my neighbor. I love her. Hi. Okay, so we have one on, and I will post this on Facebook, so if you miss it live, then we will certainly post it on there and you can check it out. Hey, Sarah, thanks for joining.
Hi, Sarah.
And so I am going to hand it over to Alan. Again, ask us anything. We will. There you go. That's welcome to my life. So anyway, we are here to answer any questions. Alan,
there it is again.
So here we go.
Hi, everyone. I'm excited to be here. Thanks for having me, Ashley.
You're welcome.
The one thing that I wanted to say is kind of go into the new year is the Federal Reserve announced at the end of last year that this year, just like last year, we're going to be inching up in interest rates. Mm-hmm. So as home prices continue to go up, supply continues to kind of go down. I think it's been the trend over the last little bit. So right. What's out in the market gets less and less, it seems like. So the supply is down, but the demand is up because there's going to be a lot of buyers coming into the market because interest rates may inch up. So what could happen is your buying power could potentially go down because you're going to pay more for houses,
right,
and a little bit higher in interest rate as they inch up. So those two things, as we go into the new year, I would say if you're wanting to enter into the market as a buyer, and you have questions about that, I think those would be the two biggest things that we face going into this year.
So what do you think about, I know that I have heard that the government was planning on raising the interest rates 4 times this year. I think they just did one interest rate increase, and we don't know exactly what that's going to be. It could be 0.5%, it could be 1%. Everybody knows government is sort of like on their own, so we just don't know what that's going to mean. But if I were, let's say I had $200,000 to buy a house, and the interest rates now are what for a conventional?
Their interest rates are in the low 4s for a conventional rate.
Okay, which is that's a very good rate.
It's cheap money. Continues to be cheap money. Yep.
Okay, so even if it went up 0.5%, that's still a very, very good rate. But talk to me about what that's going to do for your payment. How much of a difference are we looking at between a 0.25% or 0.5%? Because if you've got, coming from the realtor point of view, if you have $200,000 to spend on a house and the interest rates go up, that's going to narrow down what you can actually spend on a house, which also means that the number of houses that you have to choose from are lower. We actually Joseph says, always thought Facebook was for social media, not work. Thanks. This is
work?
This isn't work. This is fun.
This is
We're having fun, Joseph. I've seen your Facebook pages. Anyway, so being in the Charlotte area, I am in North and South Carolina in the Charlotte area, and I know I just looked it up, Alan and I. The market, the number of homes that are on the market right now, what we call the month supply, has significantly gone down. So from 2014, we probably had, what did I say? 11 months
yeah.
of inventory. Now we have less than 6 months of inventory.
Less than 5, wasn't it? Yeah, 4 point something.
Was it?
Yeah.
4 point something. Anyway, what that means for a buyer is it's going to get harder and harder and harder for you to find a house in your price point, unless you're, in my opinion, at a much higher price point. It's going to be a little bit more difficult. However,
let's say hypothetically there's a house today, let's take your example, 200,000
okay,
today, right? Let's say interest rates are 4%.
Mm-hmm.
As we move into the spring market, which everything picks up,
right,
that $200,000 house now becomes, because of demand and less supply, now can sell for 225,
mm-hmm,
and the interest rate, let's say, goes to 4.25.
right.
And I'm just hypothetically saying that. Now, instead, your payment's probably going to adjust several $100s a month.
That's
just
a lot
on two factors that buyers have zero control over.
And that's
None.
a lot of money for someone, that a couple $100 for me. I don't know about you, but that means a nice dinner with my husband and maybe a couple glasses of wine.
Absolutely.
Or 3, whatever.
And just as important, it could prevent someone from getting qualified.
Exactly.
To purchase that home. So
and
$200 a month could, put their debt ratios to a point where it can't get it qualified,
mm-hmm,
for various different reasons. So it can really, really affect your buying. And I call it buying power. Buying power is how much can you buy at what price,
right,
and then the interest rate affects both of those things.
right.
So
right.
and the home prices, and we don't, to some degree, we don't control the home prices. We definitely don't control interest rates, right? We have no control over that. So, again, 2 factors, huge factors when qualifying for a home or finding the home that you want to find. Those 2 factors are really out of control of the buyers.
Exactly.
Mm-hmm.
So you mentioned debt to income ratios, and I think a lot of people don't understand. They say, maybe they're renting right now and you're paying $1,500 a month in rent, and you can manage that. But when you go to purchase a home, it's a whole different ball game, because they're looking at, when we say debt to income ratio, we mean how much money are you bringing in and what is going out. And that includes credit card bills, car payments, installment loans,
student loans,
everything,
child support, alimony. What it isn't is water, cable, your month-to-month things that are
mm-hmm,
utilities.
Like Netflix wouldn't be considered.
Yeah, Netflix isn't,
okay,
but it's your credit card debt.
Okay, good. Okay, so Netflix is safe. So anyway, does anybody have any questions? I see there's a lot of people here from the Atlanta area, and these are all of my friends that I love and adore. And yes, we love it, but I'm sorry, I hate the traffic. So, we don't have that here. So anyway, Alan, do you do Atlanta?
Absolutely.
You do.
Absolutely.
Do you do all over the country?
We are a national mortgage lender.
Okay.
We're in all 50 states.
Well, that's good to know. Now, you also mentioned to me, well, I'll go back to this. A lot of times, as a realtor, I'll have a client that they're not pre-approved when I first speak to them. And so I will give them about 3 or 4 names, or sometimes they just say, I'm going to call my guy. Okay, that's great. But maybe they don't get approved, or there's something about it that they don't like. One of the really nice things that I really like about Alan is that I can take these clients who may have a problem getting a loan with other companies, and he can sit down with them. Somebody just waved. We're basically in a fishbowl. So, but I can get them in touch with Alan, and he can sit down with them, talk to them, educate them a little bit more about the loan process, what they need to do to get to where they need to be. And sometimes what other lenders may not be able to approve,
Yeah,
you might be able to do it.
It's very possible, and I do that a lot. And to piggyback on your point, what a lot of people, when they go to and they apply for mortgages, it's either, they feel like it's either a yes or a no, right? So
Right.
either
I got it or I don't.
you go and then you got it, and then that can really frustrate people when and it can stop a lot of people from actually entering the buying market because they have a fear of being declined.
Right.
Everybody has that.
We all have
you
a fear of being
that.
declined.
So
Who doesn't?
exactly. With me, it's not yes or no, and hopefully it is yes.
Hi, John.
And if it's not yes today, it's when. What can we do to put you on a path to homeownership?
Right.
So that's more of the language that I use as opposed to denied.
Yes.
Right? No, it's if we can get you approved, great. We'll get you in the market. We'll hook you back up with you, and you can get out and show them houses and do what you do best. And if it's no, then I communicate
That's
that
questionable.
to you.
And I appreciate that, because I have a lot of clients who I do a lot of first-time home buyers, and I love first-time home buyers
Me
because
too.
they get so excited, and it's the biggest purchase that they're ever going to make, and they have so many questions, and then it comes down to the mortgage process, and they say, oh my God, this is becoming a terrible process, or they keep asking me for all of this information, and they don't understand. And I think if they've been told no once, they may just say, okay, that's it, I'm not going to try again. But I tell people, just because you've been told no once, you got to talk to other people, because every financial,
We're different.
they're all different. They all have different standards. I mean, the interest rates that you're going to get, I'm sorry, that's pretty much standard across the board for the most part.
Yeah, sure. That's a fair statement.
But one thing I tell people is, you may have been told no by somebody else. Somebody else might say okay, or they may actually take the time to say, they'll look at your credit or whatever you've told them and say, we can't say yes to you right now, but take these particular items. Here's what I want you to do, and then in 6 months, you'll be able to purchase that home. And I think that's very important, because I don't think a lot of people, especially for some home buyers, they really don't understand the process.
They don't.
And it's very important to explain that to everyone. And I think that Alan does a really, really fantastic job in doing that. Now, this is not a let me sell Alan because he's so fabulous. This is, we wanted to answer any questions that you might have. I see Jay. Jay is a old friend of mine. He lives in Atlanta. He is my best friend's husband's best friend.
Awesome.
So I'm going to ask Jay to please ask a question. He is a CPA. So anybody needs a good CPA in Atlanta, you might want to look up Jay. He's pretty good. I see Dawn and Cindy. Hi, Cindy.
Hi, Cindy.
Why aren't you here? Jessica, John Combs, Kevin, and Christy Trist. Oh my gosh, I went to high school with her. Hello, Christy. And I'm a little disappointed that my best friend in the whole wide world is not on here. She's going to hear from me later. But anyway, even though I am in the North and South Carolina area, I certainly can help you with national laws on real estate. John has graciously offered to be here today. I may have to, woo him with a candy bar or something later to thank him for doing this. But I wanted to sort of open it up and see if anybody has any questions. Please ask me a question. Anything. It says ask me anything.
Anything.
Anything. Right now, I'll take anything. I don't know. How do you tell if they're asking a question? Somebody asked me a question, and let me see if I can even see it. Oh, here's a comment. Hold on. Oh, that was Joseph's comment. Okay, we already answered that. Caroline, you asked me a question.
I think they're all typing them up.
They must be.
They're ready to come through
They
all
must
at the
be.
same time.
They're really long, intricate questions. How was your Christmas?
It's fabulous.
Good.
It was.
Excellent.
It was
Mine
nice.
too. Did Santa Claus treat you nicely?
He did. Probably shouldn't have, but he did.
Well,
he always
good
does.
for him.
So, yeah.
You know, Santa's a very
I'm
nice
blessed.
guy.
I'm
Good for him.
blessed beyond belief.
Yes. Well.
So let's ask each other questions.
Okay. So let's see. What else can I ask you? Do you handle VA loans?
Absolutely.
Yes.
We do. I've done tons of veteran loans in the past. So our main core business is conventional loans, but with a minimum down payment of 3%. FHA is a minimum down payment of 3.5%.
Keep going, but we do have a question.
Great question.
Woo-hoo.
Great question.
Caroline asked, what does the housing market look like for this spring? Well, thank you for that excellent question, Caroline. I appreciate it. Obviously, I have a lot of folks from Atlanta. I don't really know the Atlanta market, but I can speak to the Charlotte market. Charlotte is one of the top places to live right now. It is very hot. And like John said earlier, the prices are going up because we have less than 6 months of inventory on the ground right now. What that means is we have more buyers than we have homes to sell. So what that is going to do is sort of push the prices up a little bit. You know, it's what's that economic term that we learned? Supply and demand. Yes, supply and demand. So my guess is, and I can't predict the future, but my guess is it's going to be a very tight market. Coming up this spring, we're going to be in a lot of multiple offer situations. And if you're a Game of Thrones fan, my name is Ashley McNulty, first of her name and winner of multiple bids. So there you go. Am I going to let you buy a house that's not worth it? Absolutely not. And I'm going to tell you. There may be some other agents out there that they'll let you buy a house. I don't know. All of the agents I know are very, very ethical, and they're wonderful.
Well, there's an appraisal process too that protects buyers to a certain degree, right? So we have to get through an inspection period,
Yeah.
and then through an appraisal process, which is done through us, the lender.
Mm-hmm.
Inspections are, kind of on your side of the transaction. Through the appraisal process, which lenders do to protect ourselves from the investment, right? We also protect your buyers and our clients, right? From overpaying for homes. And it's a third-party independent appraisal that comes out to the home. You can't select them. I can't select them. The buyer, the seller. So it's truly a third-party independent person that comes in.
So how does that work?
appraises the
How
home.
does that work exactly? And I'm going to put you on the spot
Mhm.
because one of the problems that I have had, and I know I've talked with other real estate agents, realtors, and my father-in-law is a realtor in Atlanta, and he and I have even discussed this. They have changed the standards and the rules of how you become licensing, how you can actually become a appraiser, and it is much, much, much more difficult than it was before. I believe you have to have a college degree. You have to have X amount of hours. Anyway, my point is that a lot of people are leaving the business. That said, one of my concerns is that when I have a house listed and let's say it goes under contract and the appraiser comes back out, and I've noticed sometimes they may not be from the area and they might not know the area very well. So when that appraisal comes back, I might not feel like it's right. So what do I do in that situation?
So when some of the new, after the debacle that we went through in 2008, 2009, and the government stepped in and did all this Dodd-Frank stuff, and a lot of what they want to protect consumers, right? And so it's not a perfect process by any stretch of the imagination, but the appraisal process was one that was included so that it was truly going to be a third-party performance of the appraisal, which could not be influenced by me, can't be influenced by you, can't be influenced by the seller, the seller's agent, the buyer. No-no. It's a big no-no. So, and so part of where the flaws could be in that, so it gets ordered by us, but we have to have a panel of appraisals, and we may not necessarily know that appraiser doesn't necessarily maybe know that neighborhood is better as another one, right?
So that brings me to my next question. Sarah Kraus has asked, and Sarah is one of my best friends, so thank you for joining. And she also used to be an appraiser.
Oh, yeah.
She had her own company, but she does ask, are the appraisers from hold on, I can't read.
We do both, Sarah.
Are the appraisers from a fee panel at your company, or do you contract with an AMC? What is an AMC?
An AMC is a third-party appraisal management company. That's what AMC is an acronym for, appraisal management company. But we're also a national lender, so we have what's called, we act as our own AMC because we have an appraisal panel that people that we vet but we still have to use the same procedures as an AMC does, which means you have to bid it out.
Okay, but they don't work directly for you.
They don't work directly for us, and they can't, right? So I don't think they're contracted. I don't know how they're paid through us, but they're not paid directly from us.
Sarah can answer that question. How are they paid?
They're paid at closing.
Big money,
right?
Yeah,
big money. So we do both. We have an appraisal management company that we also use. We also have a appraisal panel board, and the difference typically is without a third party in the middle, it's always cheaper. Right. So we cut out the third party person, which is the AMC.
Right.
So now we can get appraisals cheaper, and we have more flexibility on turn times, how quick we get them back.
What is the typical turnaround time for you?
It's from the time that we order the appraisal till it comes back, 7 business days is roughly our turn times on those. And that's
nice because I can tell you from my experience as being a realtor that it usually takes about a week just after they do the thing, after they have the inspection. So that's pretty good.
That's, and some of that is the advantage of having the appraisal panel board internally, because we reach directly out to the appraisers without that third party in the middle.
Okay.
So you're kind of at the mercy when you order an appraisal through an appraisal management company, which is the third party. Then they reach out to the appraiser, and then we're kind of at the mercy of how quickly they get that scheduled. So it's quite a bit of advantage.
So I have another question for you. Let's say my client goes out and buys a house, and they pay $200,000 for this home. Okay. The appraisal is ordered, but it only appraises for $195. Now what? I can tell you now what from my end.
Yeah, it's not fun,
well,
right?
Actually, I have a different view, and maybe this is wrong or right, but I tell people, do not panic if it doesn't appraise, because what that does is now we can go back to the seller and say, here's the appraisal, here's the number it appraised for. This, we're not going to pay more than this. And I tell you, 9 times out of 10, they will come down on that price.
Don't they say to you, yeah, we were a little worried about that? Sometimes, yeah.
Yes.
I find that too, yeah.
Sometimes they're like, sometimes it appraises and they're like, whoo, whoo. And I've been that way too. I'm like, oh my God. Is it appraised yet? Is it appraised yet? But that said, yes, it does give you a little bit more comfort,
sure.
Even though you won't be paying that first offer price, right? So you're going to go back in and make an offer. Now, they could say to you, let's get back in. They could say to you, sorry, I'm not going to lower my price. In which case, we're going to sit down and have a conversation, because Alan is not going to loan you $200,000 on a house that appraised for $195,000.
We go off the appraised value. They
Yes.
could pay the additional $5,000. I see that happen a lot.
I've seen that too.
It's it becomes
How much do you love the
negotiable
house?
at that point, right?
Yeah.
Exactly.
Everything's negotiable.
It's negotiable at that point. Meaning, they within that due diligence period, right?
Right. Right.
You get with them and you get with the sellers, and just like you agreed on a price, now you got to agree on something else.
And you mentioned due diligence. That is a little bit of a difference between North and South Carolina. North Carolina does due diligence. South Carolina, we don't. We can if we want. And I think it's going that way, but I don't know. I'm not an expert. Yes. So, that's why I tell people, don't panic if it doesn't appraise. Now, if we offer $200,000 and it appraises for $150,000,
yeah,
I'm probably going to say, let's walk. That's not going to, but yeah. So,
then you go, what else is wrong?
Oh,
yeah.
Yes. And I don't know about you, but I want someone to tell me, look at that. Look at that spot. See that? That could be bad.
Yeah.
And that's what I'm going to do. And that's my job. I have the fun part. Alan has the stinky part.
Yeah. It's fun. We make it fun.
He does. He's a fun guy. We like him. But I do say, ask some questions, educate yourself, because everybody's different. I'm not going to be for everyone. You may not like me. I like to have a good time. I'm going to, giggle and make a fool out of myself, and I don't care, and it's fun. And that's who I am. Because guess what? The buying process is supposed to be fun. You're supposed to be having a good time. If we're not having a good time, then I'm going to refer you to another agent because, yeah.
Well, what about this? Maybe people are wondering what do I have to give to a lender to get approved?
Oh my gosh, everything.
Shoe size, blood sample, and I think that's a myth.
Yes, the name of your firstborn
The
child.
name of your firstborn, and we've heard a lot of that. So, and that's not the truth. There's some things that are required from an income standpoint. 8 out of 10 times, if they're salaried employees, or they're paid by the hour, or they make overtime income, they get a W-2 at the end of the year.
Right.
All right. Not a 1099, not self-employed, but they're W-2.
So I'm 1099.
You're
right?
1099, and so I'll
that's
discuss
a whole
that in
nother
second. Yeah.
ballgame.
The W-2, so we would need 1 to 2 years of their W-2s, not their tax returns.
You don't require tax returns.
Not for salaried W-2 employees.
Okay, well,
All
that's
right.
interesting. I did not know that.
Well, there would be a few small ends, commission income greater than 20, but we don't want to confuse anybody. So,
Can you count bonuses? Let's say somebody makes.
Absolutely.
You can. What if it's like an iffy bonus? Like, it's based on.
It's kind of likely to continue that bonus. So we look 1 to 2 years back. Did they receive a bonus 1 to 2 years back? Which usually indicates that there's probably going to likelihood to go forward.
Sorry, it's my brother. So
why isn't she on Facebook Live?
Yeah, what the heck? He's working and he's not on Facebook, so we're gonna have a conversation.
We'll get set up with an account.
That's my brother. We love him. Okay.
So W-2, 30 days worth of pay stubs. So if you get paid every other week, 2 pay stubs.
Okay.
1 W-2. Now we're up to 3 pieces of paper, right? That you can get all from your payroll system.
Correct.
Usually in about 5 minutes. That's income. That's what we need for people that are W-2. So we don't need their firstborn. We don't need.
Is that for the pre-approval? Because there is a difference between pre-approval and pre-authorization.
That is for underwriting for people that are on a salary, paid by the hour, including overtime, bonus income, commission income, things of that nature that we can take a 2-year look back or 1 year look back, and we can calculate their income and the likelihood of that income to continue, right? We can do that through a W-2 and a pay stub.
And then that will allow you to give them a pre-authorization?
That's what an underwriter will require.
Okay.
Right? And that's what the agencies require.
So that also means pulling credit. I don't know why that keeps getting dark, so let me do this. No.
And then assets, we would need, where the assets are coming from. If they're in the checking and savings account, then we would need 2 months of that.
Okay.
Which, now everything's online. You can pull those 2 statements in literally about 5 minutes for most people. Wells Fargo, Bank of America, you can name it, it goes down the list. Most financial institutions have the ability to pull that stuff down online. So there's your income, there's your assets, and those are the 2 biggest things that are 95% of the time when loans don't close or people aren't qualified. It's because of those 2 things and credit, right? And then credit, we pull credit with authorization from them. So those 3 are the 3 pillars of getting approved for a loan. They're all equally as important as the other. Right. So once we kind of establish those things, again, 95% of deals that don't close, they fall in one of those 3, or that we can't get them approved or whatever it is, they fall into one of those 3 things. So those are the 3 things I talk about when people want to get pre-approved or get approved through underwriting. Those are the 3 big things.
And let's talk about some of the other things that shouldn't do when you're getting a loan.
Buy a car.
Don't buy a car.
Open a new credit card.
No. Spend a lot of money. Don't go out and buy furniture for your brand new house because
might not do it.
that means you're not getting your house. I had a client that I was working with for like a year, and they showed up at the house with a $60,000 brand new truck. Mm-hmm. And they already had debt to income ratio problems, and it was a terrible conversation, but I had to tell them, I go, we can't do it. We're done. So whenever you buy a car, when you're looking for a house, that makes real estate agents and the lenders, that makes our eyes twitch. Like this.
So we have those conversations.
Oh, yeah. Oh, my gosh, yes. I mean, I sit down and I tell them, I tell people don't even spend more than $100 at any given time. Because, you're going to have to keep, a lot of banks will say, where did you spend this money? Right?
Just on credit. We're not talking about people's checking accounts and savings accounts and things like that. Right. I mean, they can. What I tell people is do the same thing that you've been doing the 3 months leading up to where we are today, and typically that works.
Don't deposit $10,000 into your checking accounts, because.
And if you do, we have to be able to explain where it came from.
We might
get some explaining to do.
Yeah, you got some explaining to do, because that sort of triggers Homeland Security, and you don't know. No, you don't want to deal with that. So, anyway, do you have anything else to add?
I think I covered it. If there's any questions, I'm happy to field them. Yeah. So,
Alan. Why don't you share your contact information, and I will also share it in the comments. Oh, look, I had it on my desk. What? Here, is that it?
That's it.
Okay. John. Alan's awesome. We love him. So even if you're in Atlanta, North Carolina, South Carolina, Virginia, okay, Florida, he can help you. Ask questions. Ask me questions. Again, this whole thing is called Ask Me Anything. And I'm going to try and do this at least once a month, maybe twice a month. And hopefully we'll get more questions. We got some very good questions. So I want to thank everybody for joining us. And thank you, Alan, for
having me.
You're very welcome. And I appreciate it. And Rupert appreciates it too. So anyway, I appreciate you guys. Thank you so much for joining us. And if you have any questions for me, for Alan, please let us know. And even if you're not looking for a house, you just have a general question, I'm happy to answer it. So thank you again. Hope that 2018 is fantastic for you. I feel it. It's going to be great.
Huge.
It's going to be huge. All right. Well, thank you very much. I appreciate it. Okay. Goodbye. And I appreciate y'all joining.